Hey, this is Ali from FX ORDERFLOW channel, and in this video I'm going to show you guys how much advantage you can get by using level 2 data rather than price action. So before I start to explain, even if you want to use price action, you can use level 2 data for getting more confirmation and also increasing your accuracy for your technical analysis. So in order for you guys to understand better that how much advantage you can get by using level 2 data, I'm gonna show you guys my last trade, which was taken yesterday on S&P 500, because it's much simpler to just explain it on a real trade rather than talking about theory. So let's talk about it. In this video, I'm going to talk about footprint and also volume profile. So if you're not familiar with these concepts, you can check my educational playlist in the channel. I do upload one or two free educational video every month. So if you don't want to miss out them, make sure to subscribe and check the channel like at least one time in a month for the educational. I do also explain a lot in my daily in my daily trades playlist, so you can also check those videos. So let's talk about the first step of the day when you want to take a trade is that you need to know that what is the most probable bias of the day. Is it going to be buy or sell? So before you even start to take a trade, you need to know that you're going to be buyer today or a seller. At least for day traders, they need to know, or intraday traders, especially intraday traders, because they take the trade and they keep it much longer than day traders. You need to know that. But if you're a scalper, it's way different for the scalpers. I'm not talking about the scalpers in this video, but even if you're scalping, by using level 2 data, you will have way better chances than price action. So in this video, I'm going to talk about day traders and intraday traders. So let's get into it. First, I'm going to talk about the bias of the day. So let me bring the volume profile chart. So this is volume profile chart for S&P 500, and this is hourly time frame. At first, it might seem messy and like a little bit confusing, but if you know the concept of volume profile and you get used to it, it's not that bad after like practicing over time. You can also separate the weekly volume profile from daily 24-hour and also NYSE volume profile, but I do like to combine them all together because I don't get confused. I'm just used to it. But if you separate them, the chart wouldn't be this crowded. So it's up to you. So most traders, like price action traders, even if you are highly experienced, when you see this, there's two possibilities. You're either thinking about more buys, because if, as you can see here, the chart for S&P 500 is really bullish, and you might think, okay, this is a range, it might go up, so I'm going to only think about buys in this area. Maybe after we sweep the low, grab the liquidity and go higher, or other strategies that you might use. So you might think about buys, or if you're more experienced and highly skilled in price action, you might think about sells. Okay, so even if you guess the direction right for this day, which the trade was taken for me, and you want to take sales, it's extremely hard for you to guess the reversal points and put your stop loss in a safe place. So even if you want to put it on a safe place, you might get a wider stop loss and not get a good risk reward ratio in the end. So this was my trade which was taken. The stop loss was 8 pips and I got 44 pips. So the risk reward ratio was 5.5, which is really good for one single trade. And this trade might seem like crazy at first, because if you look at that, this is daily candle. I got on the high and I just closed my trade in the lower wick of the day. So taking such a trade is really, really hard with the price action. Now I'm going to show you guys how much your life is going to be easier if you use level 2 data. So let me show you the power of volume trading. So from the first day of the month, even though we were going higher, the delta was negative. So the delta is the difference between buyers and sellers. Okay. So even though we were getting higher, like a really massive, huge move, the delta was negative. The next day was also negative. Okay. So aggressive sellers were more than aggressive buyers. Okay. So this is the weekly delta. The next day was positive, was not like the delta was not, the number was not a lot. It was less than the previous day and also the day before. So even though we had buyers, but the difference between buyers and sellers was less than the last 2 days. So the next day we also had negative delta. So what does this mean to me? So we're going higher. The market is struggling to make higher highs. We couldn't even make a higher high in Monday. This is Monday, this is Tuesday, and this is Wednesday. Right now it's 5 a.m. for me. So even though we were going higher, the delta is showing me a really bad sign for the continuing push to highs. And also, if you look at the price action, we're struggling to make higher highs. So yeah, if you're a highly skilled price action trader, you might even have more confirmations for sells. But I have seen days like this, the exact same thing here. But the difference was that the delta was always positive and strong numbers. So we would make a range and eventually we would break the range to the highest and wouldn't go down even. So like, let's just look at this part here. So if everything was here, same here, except the deltas was positive, okay, there was a high chance that we would make a new high on the Tuesday. So by only, I'm just talking about deltas. Let's not talk about anything else. We have way more things here than delta. Okay, we have way more things than delta here. That is indicating that the chart will go down today. So even if you just look at the delta, it tells you that, okay, we might push lower today. Okay, if I want to show you guys more signs, one of them would be here. So the delta was positive here, but still the daily candle closed bearish. So we opened here, we closed here. So we had a high rejection on the higher wick here. So the daily candle closed almost bearish, even though the delta was positive. So this makes a cycle here. If you don't know what is cycle, you can check my other videos. I'll also gonna make more videos about cycles and deltas later on education for free. So there's a high chance that we're gonna get this low later. And also by looking at the delta, this might be a potential sell zone for us later. Okay, so that's one sign. Then we go on and we see here. So even though the delta was negative, the day closed bullish. So we have another cycle here. And in this day, we have another cycle here. How? The day opened here, closes here. The daily candle was bullish and the delta was negative. So we have another cycle here. So why I said this might be a potential sell zone, but I'm not saying this might be a potential buy zone. Because we are bearish on the chart. If we see the deltas for the past few days before, there's a high chance that we go lower. So if we're going lower, this might be a good target that is going to get hit or even go lower because we have another cycle here. But this is just showing us that, okay, we're going down, but we're not going to trade on other areas down up here because there's a chance we hit this cycle and then we go push down. So now we know that we're going to sell, but we're not using other areas here. Not this one, not this one, not this one, not any of these, like, until we hit this one. After we hit the cycle, then we can sell. So not only it shows us the potential sell zone, we also have confirmation for the target, which is going to be here and here. So are we just going to use this and once we hit the cycle, we sell? No. Once we hit the cycle, we look for confirmation. What confirmation? I'm going to show you guys on footprint. The confirmation for entry is in footprint. But before that, I'm going to also talk about the value area. We also had value area here. So after the cycle, this might be a strong zone here. If we close below that, we might push lower. So even if you want to use price action, like price action is really delayed comparing to volume trading and level 2 data. So even if you want to use price action, you can wait for the cycle to get hit and then close the candle below value area, which we did here on this bearish candle. Okay, then you can enter by your price action entries and triggers. Okay, so let's go to footprint and see what happened over there. So this is the footprint and the time frame is 1 minute. You can also use 5 minute and 10 minute, but there is going to be more delay over there. So if you want to use that, it's easier, honestly, to use 5 minute and 10 minute. It's much harder to use 1 minute because it needs like more experience and you need to be more skilled to realize that what is actually happening down here. If you're not like experienced and used to volumes, you might end up losing more, because if you want to like trigger in 1 minute time frame, you need to be highly experienced, and also you need to have high speed in detecting the absorptions, which needs a lot of painful exercise on the chart and watching the chart, like hours and hours and hours watching the chart brings you that skill. So I use 1 minute because I get better entries and also it's way better than other time frames. But when you begin to trade with volume trading, you might want to use 5 minutes or 10 minutes to just understand better and then go to 1 minute. But if you're going straight to 1 minute, you really need to lower your expectation at first. So this is 1 minute and this is 5 o'clock for me, which is NYSE open, and the white line here is the cycle that I talked about. Right over here there was a cycle. Okay, so we did hit the cycle before the market opened for NYSE, and at 5 o'clock when the market opened, at first we had a huge amount of sales, but the market didn't push down. So we had absorption buyers down here. So I got worried that we might actually go higher and then go down. But right after that, the buyers entered the market. And right here, we had high amount of buys, but that the market didn't push. Even the candle size is really low, even though it has really high amount of buys comparing to sales. Look at the delta is 479. And then we kept buying more and more, but we couldn't go up. And eventually the sellers entered the market. Okay. So I entered my trade around here. I'm going to show you guys on CFD later. And also I'm going to make a 2 to 3 minute reels on the time that I took the trade on the live market, on futures and also CFD. I'm gonna upload it in the channel. I'll put the link in the description if you want to watch the actual live trading at that moment. You can watch the video. So after the buy absorption, the sellers entered the game, and as you can see, they pushed the market down. So this is my confirmation. Okay, so we had the cycle got hit on the 1 hour, and then the sellers entered after the buy sell absorption over here. The buyer tried to push the market higher. Some passive sellers were keep planting sell limits with really extremely high speed, and they were blocking the buy orders to push the market down. And right after the block, we can see sellers enter the market. That is an obvious sign that the market is going to go down. Okay, so my first target was this low and then this low. I was not sure that we might hit this low on the same day, but just like the entry point, you can also get the exit point, which I'm going to talk about later. So even if you were not like selling aggressively down here, after we push down on the retest, you can enter the market, but sometimes we don't get the retest. So most of the time I usually enter the market aggressively. I think I entered on this candle because we did sell a little bit here. Like it's not a little bit, honestly. But even though we were selling, the market was not pushing down that. And eventually on this candle, we pushed down with a high amount of sales, which is exactly the candle I wanted to see. So I'm telling you guys again, even if you don't enter aggressively like me here, you can enter on retest. Entering on retest are always safer than aggressively, but if you're highly skilled and experienced, you can enter aggressively to not miss a trade, and also usually you get better entries on entering aggressively, because sometimes on the retest you shouldn't like raise your expectation to say, okay, I'm gonna take a retest exactly on the buy block. You should put it a little bit more down, because sometimes we don't get deep retests like this. This is actually rare. So if we continue the market here, let's continue to look at the market here. We were kept selling, and as you can see, I had an area here and I was expecting a rejection. We had one rejection here and then another one here. You see, as you can see, the second retest here was not deep. It was a retest to this block. So that's why I'm telling you guys, you can't get a like deep retest every time. But eventually we broke it with a high amount of sells, and then we took a retest to the same area. And why I say this is a retest, because we had a big trade of buys here, but the market didn't push higher and rejected from the area. If you're a scalper, this after we close below this on the retest or aggressive, you can enter a sell here. Stop loss can be up here. Even if you're like using price action, let's just say you're using price action, you don't want to even use volume profile, and you get a confirmation on a price action around here, you immediately go to footprint. You see, okay, I have some blocks here. It's buy blocks, sell blocks. It's completely mixed, but we break the block with high amount of sells, and on the retest we can enter the market. So this is going to be an extra confirmation, which is increase your accuracy for your analysis and entry way more higher than other methods on the market like price action. So I'm telling you guys, even if you want to use price action, footprint can actually help you to improve your trading and technical analysis. So we eventually pushed lower and lower, and this is the place that we did hit the first low down here. So I did close my trade, I think around here on this area. As you can see, there are massive reactions over here. So I closed my trade because I already hit 1 to 5 risk reward ratio, which is good enough for me. And once I see the reactions like this, it's just better for me to get out. I also got disconnected from the futures market and lost my data. So when things like this happen and I'm close to my TP, I don't risk it and just close the trade, because my analysis, my main analysis is on futures, and I take my trades on CFD. So on CFD, it's just the entry for me. The main analysis is here, and when I get disconnected from the data center, I just close my trade if I'm like close to TP, or if I'm not, I immediately move the stop loss to break even to just take the risk out of my trade. So as you can see, after these really harsh reactions here and sell absorptions down here, we eventually buyers entered the market and we went higher by the close of the market. So honestly, it doesn't even need more explanation. It gives you a really accurate entry and it gives you a really accurate exit. So I need to mention some one more thing here. So even if you don't want to close it and hold it to the next cycle, which was closed down here, if you don't want to, you do that. Okay, you see one absorption, you see buyers, and then we break it. You can trail your stop loss up here because you're getting closer. You can't be sure that you get it like on the same day when you see this kind of reactions. If it was going to hit it, you would see a soft fall like that. Okay, so even if you're seeing a lot of blocks like here, once you break it, you shouldn't just go up it and then go down. When you see this kind of plays in the market, this is most of the time this is not a good sign. So again, we broke it. We make another block down here, which is another bad sign. We shouldn't just see blocks after blocks of sells. So after that, you should keep your stop loss right here to like make a correction over here. So make a correction and then massive amount of sells, but the market after that sell, you see, it's keep buying right on the retest of the block down here. And then we don't see much sellers over here actually. Okay, the delta is flat. Look at the delta line, it's flat. Okay, and then buyers a huge amount of buys. So you can either close here or move your stop loss above here. If my data wouldn't like get disconnected, I would move my stop loss right above here because this is like above the candle that a lot of sellers entered. So if the market is going higher than this, I want to get out of my trade, especially if it's like entering a lot of buy positions. So as you can see here, we eventually go higher with high amount of buys. So this is an obvious sign that the market is going to go higher for the day at least. I'm not talking about the next day, I'm talking about the current day. So as you can see, we did have a comeback over here. So you get a really accurate entering price and a really accurate exiting price. I'm not saying that price action is not going to give you this, but I'm telling you guys, the accuracy is not going to be even close to level 2 data. So that's why I'm telling you guys, the best thing that you can do for your technical analysis is to move to volume trading and use level 2 data. That's literally the best way, the best possible way to do it. Perfect technical analysis. So that's pretty much it. I'm gonna show you guys the CFD in a moment. So this is the CFD trade on my real account. The time frame is 1 hour, like I showed you guys. The entry and exit is clear on the video, and the risk reward ratio was 5.5. I'm gonna upload the short if you guys want to watch a real footage of live footage of the trade that I just took. You can check the video. I'm gonna upload 1 or 2 educational video every month, so make sure to not miss out the content if you want to know more about volume trading and level 2 data. See you guys on the next video.